I really thought Nissan was headed in the right direction, on the right track. If we look at the third quarter alone, they're up 40%, which is an improvement of their year to date so far, which is up around 30% here in the United States. But in other parts of the world, namely China, things couldn't be looking any worse than they are. Before we get into the uncertainty of Nissan, this morning I actually reviewed the Nismo Z. I did a little nighttime review. The thing is it's a riot. It's a lot of fun. So stay tuned for that. But I will be, guys, I'll be heading to Japan in just a couple weeks here to preview tons of new Japanese cars, either for the Japanese market, but a lot of them are going to be for the North American market, obviously, as well, maybe even the global market. So they will have this concept there, which is called the Hyper Urban, which I think looks extremely AI generated. It looks terrible, just lines, creases, angles, everywhere. But I will be previewing that for you guys here in a couple weeks. Hopefully Nissan has some other cool concepts to show over in Japan. But we're going to head to Nikkei Asia because while I thought Nissan was doing well based off of the blinders that I have in the North American market with the huge rebound that we're seeing, especially with Infinity, Nissan is paying the price in China, and this is coming right on the heels, guys. Was it last month that Mitsubishi pulled out the Chinese market altogether? There's like cut their losses and move on because there's no money to be made. The Chinese government is subsidizing Chinese brands there massively. I just read today that NIO is losing about $20,000 per car. Actually, I take that back. NIO's losing as much as $35,000 a car. And the Chinese government is giving them low interest loans. They're also just giving them handout money as well. So how do you compete against something like that? Nissan doesn't have an answer. And so they're falling sales, and one of their most profitable markets is really going to bring down the company. How much is hard to say, but let's get into it. The number of vehicles Nissan sold in China tumbled nearly 30% on the year in August, which is a complete inverse, right, of what we saw in the United States and North America, which is 29.5% up. They fell 28% in June and 33.6% in July. So it's accelerating their decline, and their decline is much, much sharper than Toyota's sales. I think there's this beautiful graph right here. Toyota is the teal, and they're not doing great, but they're kind of just surviving in China, while Honda not doing so hot. They didn't have any really high peaks. And then Nissan is doing even worse seemingly than Honda, but neither of them are doing good, and Toyota's just kind of like staying afloat while Honda and Nissan are both sinking. But things are worse for Nissan, and we'll explain why. Nissan in July downgraded its China sales outlook for the fiscal year ending in March 2024 to 800,000 vehicles, a cut of 300,000 units from the previous figure. This is a 23% year-over-year drop. Kota Yuzawa of Goldman Sachs says, in addition to delays in developing new energy and hybrid vehicles, its use of buzzier and noisier three-cylinder engines instead of four-cylinder engines in its cars with engines that don't fit the needs of Chinese consumers and has lost its market share. Don't know how much that plays a role. Like here in the United States, what they ditched the 2.5-liter naturally aspirated engine in the Rogue to the three-cylinder turbo. It's a better motor, absolutely. It's the CVTs that kill any sort of Nissan powertrain, in my opinion. It's not their motors. I think their motors are fine. So China is a huge market for Nissan. They sold 1.04 million vehicles there last year. Again, they're going to be selling about 800,000 for the fiscal year ending in 2024. And the Chinese market accounts for 32% of its global total, even eclipsing the North American market. Well, is that going to happen this year? If they're going to sell 800,000 units in the fiscal year, No, that's not going to happen because look at what we have. We're already at 700,000 units, 871,000. So the or should I say the North American market is going to be leapfrogging the Chinese market due to the rebound here and then the plummet over in China. This is what's even more concerning. Not only the volume drops, but the Chinese market generates 34% of Nissan's net profit, more than any other Japanese automaker. In comparison, Toyota earns an estimated 18% of its profits in China, not a whole lot, and Honda earns 27% of its profits in China. Despite its profits and volume dipping in China, Nissan is forecasting a group net profit to grow 53% to about $2.25 billion this fiscal year. Also, another red flag, Nissan earns much less from vehicles it sells than its Japanese rivals, a consequence of high costs left by its expansion-first strategy under former boss Carlos Ghosn, as well as slow releases of new models. Daiwa Securities estimates that the automaker earned 18,000 yen in operating profit per vehicle last fiscal year compared to 309,000 yen for Subaru, 247,000 yen for Toyota per vehicle, and 128,000 yen for Mazda. The company reported negative free cash flow totaling 1.33 trillion yen in its automotive segment over the 3 years through fiscal year 2021. Finally moved into the black in fiscal year 2022, but remains short of making up for what was lost. We need to remember that Nissan and Renault are now even playing fields. They've for a long time have been playing little brother to Renault since Renault had 43% stake in Nissan, and Nissan only had 15% stake in Renault. Now they're an even playing field. They both have 15% stake in each other. And news just came out recently that they are doing ordering and it seems like parts ordering completely separate from each other now. So how are they able to stay afloat? Well, price hikes in the North American market are shoring up Nissan's earnings, but Nissan's profit bump from raising prices here in North America is expected to fade as early as the start of 2024. And I mean, that's going to hit a lot of the North American market. Super high interest rates and people's purchasing power is plummeting due to inflation and whatnot. So the car market is going to be pretty messy for 2024, I'm expecting, even though things are looking really, really good right now due to the pent-up demand over the microchip shortages. Now, Nissan says they will have a detailed strategy for China as part of their new medium-term business plan due out this fall. So I'm interested to see what that's about. They said they're going to be releasing several new models. These are going to include for the Chinese market EVs and plug-in hybrids. And while a weak yen and strong North American sales have lifted stock prices in Toyota and Honda to historic highs, Nissan shares are trading around 60% below a record of 1,700 yen from June 1989. Nissan's forward price to earnings ratio has hovered around 7 and compared with around 14 for Toyota and 10 to Honda. So Nissan, my heart goes out to them. I'm not quite sure how things are going to turn around for them in profitability in the near future. Long term, who knows as well. But I'll see you guys down below. Are you worried for Nissan? And their electric vehicle right here, the Ariya, which I really, really like. Make sure to watch my review on it. It's just really expensive, as most electric vehicles are, but they're recalling thousands of Ariyas over risk of software defect, and the Ariya's inverter software may detect a short circuit and cut power to the driven wheels. This includes front-wheel drive and all-wheel drive versions of the Ariya. And they're expecting 100% of the recalled vehicles to contain the defect. How many vehicles? 9,813 2023 model year Ariyas. And the report states that tiny bits of conductive material from a drive motor part might briefly cause a short circuit in the slip rings, and rotary electrical devices that transmit power or electrical signals crucial in the effective spinning of the motor. So their motors are junking out. This is worse, guys. This is worse than the wheels falling off on the BZ4X. in theory, I mean, both of them are bad, but wow. Not only Toyota stumbling out of the gates with their EV, the BZ4X, which I reviewed, it's very efficient, but the Ariya doing it as well. And I wanted to share this real quick. This is how bad the Ariya is selling. Nissan offers low-cost Ariya EV lease to dealer employees. This is a way to shrink their stockpiles and build enthusiasm for the crossover. It's a 1-year, 15,000-mile lease, has a 2.2% APR. They're offering $1,000 in loyalty cash too, and dealers say the average monthly payment is about $250 to $270 with zero down payment. I don't know of any car that you can lease for that cheap in today's crazy market. So if I was a Nissan employee, absolutely would I be taking advantage of this and just getting rid of it after a year. There's no way I would keep it, especially with the recall situation going on. And according to Edmunds, 12-month leases accounted for 45% of total Ariya leases in September. And according to Edmunds data, the Ariya's inventory turnover rate was 76 days in September compared to 59 days for the Hyundai Ioniq 5 and 39 days for the Mustang Mach-E. I had no idea the Mustang Mach-E had that fast of a turnaround. There's so much volume out there for that car right now. In the Hyundai Ioniq 5, there's a lot of them sitting on lots. Nissan Ariya is not looking good, guys. It stumbled to get to the market. I think it came to the market at least a year late. They had a staggered rollout, front wheel drive only first, then the all wheel drive came out. And now you have this recall. Man, these things are potentially junking out. You lose the power to the motor. The motors like destroy themselves due to bad software. And then you have them selling for peanuts to employees just to get them off the lots because they're costing dealers a lot of money each month in insurance just to keep them on the lot. I think there's a figure in here. Yes, it's costing me about $400 a month in interest with just one model sitting on the lot. That is absolutely insane. That's in San Francisco, which is an EV-friendly market out in California. So there are, it's bad, guys. It's not looking good for Nissan. I don't want them to go bankrupt essentially again and be bought out by another automaker, but maybe that wouldn't be the worst thing. I don't know. I don't think Toyota would want to consume them. Maybe Honda and Nissan could work together. I think that could benefit the both of them. It's bad, bad, bad. The things that are going on for Nissan right now. I'm going to end it there. Stay tuned for my Nismo Z because that is one of the shining stars in the dark night of Nissan's current situation. So thank you guys. I'll catch you guys in the next video. Smash the like button and have a great day. Long live Nissan. Peace out.